YouTube. So this is your boy Btmm. I know it's been a while, but yes, here I am. Thank you for all those who have subscribed to my channel. You have been really helpful to me. So today I'm going to be talking about the M15 trading strategy, M15 Btmm trading strategy. So before I get into today's business, I would want us to talk about this book which I just opened and which I created recently. So yes, yes, it has got comedy, what, but yeah, this is the title of the book. Yes, yeah, for those who don't have any accounts, be it DERIV trading accounts or XNS, if you want to trade any with any broker, the links are there. DERIV accounts, the link is right there. XNS, FBS, ECT. You can also check the the description below. So yes, if you want to create your accounts, this book is also there. It has also steps to guide you. It is also information on trading, which is, so this book will actually help you to actually understand some of these things, to actually help you to understand or to use it as a reference point. I know other people have been asking for a book or any reference resources or any books which they can use to really understand. So this book will help others who might need help on that part. So yes, please support me. Thank you for subscribing. If you haven't subscribed to this channel, please consider subscribing. It is a good channel and you may learn a lot. Some of you actually come to this channel after buying DP2P from me, and they will be asking, some will be saying we need new videos. Yeah, it's just that I've been very busy, but I'll be around. Yeah, by December there, I actually promise to be around. So today I'm going to be talking about the M15 trading strategy. Yes, today I'm going to be talking about the M15 Btmm, beat the market maker trading strategy. So yes, people, please don't give up. Don't give up. It's a journey, and the more you discover things, the more things will start to be interesting, and you enjoy Forex. Because Forex, if you ask those, some of the people are successful, they will tell you, yeah, there are stories behind people's success. So yes, you should also keep trying. Don't give up. Yeah, don't give up, guys. So, and those who haven't created any accounts, please consider this time to go in the description or just download this book, and you you'll be helped on creating an account. So today, like I said, we're going to be talking about the M15 15 minutes time frame trading strategy using Btmm. And as usual, yes, there is a way I approach my market. So just a recap, for those who have been following me for some time, they were 1 hour trading strategies. So almost all those videos, I was encouraging people to start from the 1 hour trading, 1 hour time frame. Yes, and if you remember from those, I would say that we first, if you're using 1 hour time frame, you first look at the TTI to gain the bias. This is a recap, by the way, and I know if you've been watching my videos, you'll be quite familiar about what I'm talking about. If you are not familiar, please go and watch those videos. So like I was saying, you go on the TTI on 1 hour time frame, you wait for the red line, which we call the signal line, to cross the yellow line, which we call the market baseline. On 1 hour time frame. And then after that cross, you wait for a pullback on that TTI, which I said it will give you a shark fin on the 15 minutes time frame. And then I said that if it's giving you a shark fin on a 15 minutes time frame, it will be giving you it will be giving you a 50 and 200 crossover on the 5 minutes time frame, and then it will give you 3 levels on the 1 minute time frame. So if you are not familiar with what I'm saying right now, please go and look at those. I go into great depth explaining the concepts there. So today I'll talk about this M15 trading strategy. So I would want to use the pair which I used on the book as the first one, because people will be asking me, what were you saying? Yeah, please explain, etc. So again, in this one, when I say 1 leg outside, 1 leg inside approach, I'm really talking about the 5 minutes. But let me take you step by step on how you actually approach the entry there. So for this one, you start analyzing from the 15 minutes time frame, as you can see there. Actually, let me go to MT5. All right, here we are. So this is the euro JPY pair. This is the 15 minutes time frame. So like I was saying, you start by seeing this red line crossing the yellow line, as you can see here if you follow my cursor there. And then what do you do? When you are actually trading, what you see this crossover again. So you have seen that the red has crossed the yellow and is now below. Then you wait for the price line to cross the red line. So we don't know where it will actually reverse, or the maximum. Even if you are looking at there, we don't know where it will actually reverse, but we can anticipate it. How? So like I said, then go to the 5 minutes time frame, where I said on the, so first you want to see the bands leave the 68. If it was a buy, you'd expect to see these bands on M5. So remember, when we are using the H1 time frame, this is information which I'm adding on top of the information you already know. If you were following the 1 hour time frame, I would say you see red crossing the yellow on 1 hour, then you will see a shark fin on the M15 time frame. The concept is still the same, nothing has changed for the 1 hour. Now I'm talking about the 15 minutes, but if you go on those 15 minutes, you actually see for those 1 hour, you actually see that the bands were leaving these oversold or overbought regions such that they will give you something like this, and then you anticipate a shark fin there. So going back to what I'm talking about today, if you see a red line cross the yellow line on M15, on M5 you'll see the bands leaving what? The oversold region. So for this case we are selling, so the bands had left the 68. This actually helps to eliminate some of the false signals, such that you are misled and you end up losing. So these are very important important steps. So on M5 you see the bands leaving what? Actually the upper band will leave the 68. If we were buying, you see the lower band leaving. Like in this case, you see this one is the upper band, so it left the 68, and then here we see a shark fin. So when we see a shark fin like this, we know that on M1, you see here there is a 13 and a 50 crossover. So we already know that on M1 we expect 2 levels. Remember, if you are using 1 hour you'll see 3 levels, but here, because we are using 15 minutes, we know that the number of levels, maximum levels you will see is 2 levels no matter what. That's just how it is. That's the extent of the shark fin. I'm saying shark fin, of the stop hand. So as you can see, so let me go to M1. So recap 13, yellow line and the red line cross on the TDI M15, and then on M5 you see the bands leaving the 68 as well as a shark fin. Then we are now going to M1 to see if there is a what? There are 2 levels, or if there is a 50 and a 200 crossover there. Right, here we are on M1. You can clearly see that there was a 50 200 crossover on what? On M1. So 2 levels on what? On the 1 minute time frame. Now we're anticipating a what? We know that this price now has to come down. So we know maximum is what? 2 levels. It has to come back down. How does it do that? It will form a 13 and 50 crossover. So it starts to count again, level 1, and then it will form the 50 and the 200 EMA crossover to form level 2. And then so going on to what I want to explain today, I think this is what people would want to actually hear today. So I'm not going to talk about, first of all, I'm not going to talk about this why in some cases you see that after the 13 and you see 13 and 200, and then you see 250 crossover, and then you see here the price line being oversold, and then you see the bands leaving the 68. I'll only focus on the bands leaving the 68 because for the oversold, or if the price line is at 68, that's a lecture for another time, and I know people will be excited to hear more about that. But today I want to talk about the the one leg, yes, the one leg outside, one leg inside concept. So as you can see in this setup, we know on M5 it will give you what, a shark fin. So on M5 we know it will give you a shark fin. Let me go to the book for this, it's actually easier. So as you can see here, there is a shark fin there, and then the price, so it's one leg outside the bands, which is a shark fin, and then we can see there is another shark fin there, another shark fin. So shark fin there, shark fin down there, and then one leg, since we are selling, there is a shark fin, then it comes back, it bounces inside the bands, and then it comes out of the bands. Those are very important things to note. And for this video, I want to target this one in the middle. So like I said, want to target. So we know every time price will always give us a shark fin, and we know that it will come, so it will be outside, it comes back in, then it give us a leg inside the band, and it has to come out somewhere. Tina, we want to target this point, right? Want to target this point. So what do we know about this point? Right, we know that whenever we see this shark fin and it crosses this signal line, we know that definitely on M1 there will be a what? There will be a 13 and 50 200 crossover. Now this part is the one which changes. Sometimes it will give you an ID50 on the M1 time frame. Sometimes it will give you a safety trade on the M1 time frame. So it means on M1 we will be having a 50-200 as anticipated, right? And then we'll get definitely a 13 and a 50 crossover on M1, and then this part which will be shown by a shark fin on M1, this part which we clearly know that it will definitely happen, is either it will be a what? An ID50, or it will be a safety trade. So if it's an ID50, we know that it will, on M1 we just expect to see a 13 and 50 crossover, and then we expect price to come to the 50 MA on M1, and then it will come down and it will be shown as a shark fin on that M1, and it will be this point. It will be this point. I know at this point it is confusing, but as I give more examples it will become clearer and clearer. So it will be what? It will be this point, right? And in some cases it will be what? It will be a safety trade, meaning on M1 we'll see a 50 and a 200 crossover, and then you see pullback to the 200, and then this point will be a shark fin. So it will be something like this on M5 on whatever pair you are trading, and on M1 it's either it will be an ID50 or it will be a safety trade. Is that clear? Let me go to M1. So like I said, so on M1, right now, going to talk about the M1, like I said, we know it will first give you what? A 50 and a 200 crossover, and then we start waiting for what? Our shark fin. We know price on M1, it will leave the 68 as usual. It will leave the 68. After it has left the 68, this pullback on M1 will either be a what? A safety trade, meaning it's occurring after there is a 13 and a 200 crossover on M1, or it will occur whilst the 50 and 200 crossover have not occurred, such that it's now giving a what, an ID 50 on M1. So in this case, this is a safety trade on what, on M1, or it's a trade which is happening after the 50 and the 200 have crossed, meaning this is a level 2 trade, and when you enter, you should make sure that you quickly come out. It's not always the case that the market will go down for a long time, but if you trade after the 13 and 50 crossover, you know that if it gives you a what, an ID 50 trade, you are more likely to stay in the trade, meaning it has more pips compared to the trade which occur after the 50 and 200 crossover on M1, but you just trade what the market gives you. So in this case, you can clearly see, so we always know that on M1 the bands will leave the oversold areas, and then it will give you this shark fin. This shark fin will coincide with what, the area where you expect to see what, where we said you expect to see a shark fin, and then that second leg which is now inside the band will be shown on M1 as this point. So let me go to another pair so that at least I explain using main examples. Now going on to the second example, like I said, I always start from the TDI. The TDI for me is a guide. So for this case, we see that the red line crossed the yellow line on M15 time frame, and then we see it's going down, and then we see this crossover of the price line and the signal, or the red line and the slime line. So when you're trading, you see this crossover and you see that price is going up. What you then do, you then go on M5 to see what are the bands leaving the oversold region. Number one, is there a 50 and a 200 crossover on M1? And then you start anticipating the trades. So let's go to M5. You can also back test these things on different pairs, and you see what I'll be talking about. Right, so on M5, like I said, you'll see this. The bands, they'll always guide you. The bands will leave the oversold region, and then after that, you then see what, this shark fin. Now, like I said, we know that this shark fin will mean that on M1 there is 50 and 200 crossover, or we are actually anticipating two levels, and then we said we ignore this first one and then we target this second leg. So one leg outside the band, second leg inside the band, and then it always comes out. It has to come out somewhere. So we are targeting this area, and like I said, on M1, what I expecting two levels, expect to see a 13 and 50 200 crossover, and then this will either be what, a safety trade, or it will be what, an ID 50. Now this is M1. So what are we seeing here? We're seeing that there is a what, a 50 and a 200 crossover on M1, and then the bands leave the oversold region. This case was selling, so they leave the 68, and then we see our next shark fin. We know that this shark fin will either be a safety trade on M1 or an ID 50 on M1, but in this case it's a safety trade. So we know that when we see this, it's at 200. So this is, so we know that This is the reason why most of the people like the 200 EMA. Sometimes when you're looking at people's trades, you won't be understanding why they've traded. Here I'm giving an example on M1, but you can actually use this principle alone. You can use it alone. You can just say, let me trade if by anticipating number one, if I see maybe the bands leaving 68 either on M15 or on M30 or on H1, and then I target specifically those regions, the next sharkfin, looking at it and then breaking it down. That's how people make strategies. But today I'm not going to talk. For me, I'm just here to help people break things down. So in this case, you can see it bounced there at 200. In some cases, it actually bounced on what? On the 50. So let me look for another example. So that's how you break your trace down. You start on M15, red crossing the yellow. On M5, the bands leave 68 or 32, and then you see the next shark fin. And then on that shark fin, you know that on M1 it will be what? A 50 and a 200 crossover, 2 levels. Then after that, you go back on M5, you look for the what? The second leg, or like most people say, one leg outside the bands, one leg inside. So this one leg inside, you are saying that it is either an ID50 or it is a what? It is a safety trade. Yes. So moving on to the next example. Right, my third example will be on crash 1000. So here we can see there is a red line crossing the yellow line. I'm sure by now everyone is used to it. And then after that, you see what? You see this crossing over. So on M5, you're anticipating a shark fin. So what do we do next? Go on what? You go on M5. On M5, you anticipate to see the bands leaving the oversold reaching 68 or 32. So here we are selling. So it's a what? It will be leaving 68, and then we know that it will give a shark fin. And then after that shark fin, we know that it will what? One leg will be outside, one leg will be inside. That leg which is inside, we know that on M1, it will either give you what? An ID50, or it will give you a safety trade. One of those two. So let's go and see. So here we can see the bands leaving 68, and then they give you a what? A shark fin. But with Tina, we don't trade that what? That shark fin. Or let me say, I haven't taught you how to trade that shark fin. You can use different concepts there, but that's a video for another day. So we anticipate this, and we said this will either be an ID50 or it will either be what? A safety trade bouncing off the 200. So let's go and find out. Right, as you can see here, on M1 there was a 50 and 200 crossover, then there was a 13 and 50 crossover. On M1 it did cross there. You can see that there was a 13 and a 50 crossover, and then it went up again such that there was a recross. However, on M1 there was this shark fin, the yellow line was below the 50 level. Oh yes, I'm going to be talking about the importance of these 68, the 50 level and the 32 level on the next video, and how you can actually, and why you see in some cases or in many screenshots actually you see people writing on the 68 level that sell here, or at 32 saying buy here. There are actually reasons why people write those things, but that's my next lesson, where I'll actually go into great depth talking about what the importance of these 68 levels. So what do we know at this point? It left the what? It left the 68 level. It was below, but here it's not a what? It's not an ID50. So what do we do next? We come here. Here is now even below the 50, and then there it wasn't really going, didn't really touch the 200 EMA. But I hope by now people have grasped the concept that that the reason why the one leg outside, one leg inside is so popular, it's because it can actually help you in identifying either an ID50, or it can help you identify a safety trade. And this is a scalping strategy. It means you can actually trade on a daily basis. There are actually many examples, but because of time, and people will be saying I don't get to the point quickly, or I speak slowly. But anyway, on the description I'll put pointers where I'll just say examples if you think you now have grasped many concepts. And before I say goodbye on this particular video, please don't forget to subscribe and like this video and share with your friends. And also, if you don't have a DERIV account or an XNS account, please consider creating those accounts. And if you have created an account, please don't be shy. You can get in contact with me. Some of the details are on the PDF, which I'll share on my Telegram group and everything. So thanks guys, see you next time. Thank you.